has gone super bearish. I mean, super bearish. What does it mean? What could we track? Let's talk about our good friend and someone we love, Billionaire Barry, because he's back on CNBC. We could talk about the all-important ADP report. And of course, we should probably also talk about, is the U.S. economy heading for a 1970s repeat or perhaps a 1950s repeat? Because the outcome will be very, very different. Folks, let's just start off with Citigroup. Citigroup has been the most bearish bank on Wall Street. In fact, I think it was last week or the week before, Citigroup was still calling for 150 basis point cuts this year. In fact, I believe until very recently, Citigroup was still calling for a June rate cut. Well, Citigroup has gone from bearish to super bearish. They are commenting that the U.S. economy is slowing down, the job market is weakening, and now we can count on the first rate cut in July. And more importantly, Citigroup is calling for, and I kid you not, 200 basis point cuts in the next 8 meetings. Yes, folks, the next 8 meetings. Now, again, in order to get there, there will undoubtedly be several cuts of 50 basis points. So again, it doesn't necessarily have to be a quarter at a time. Typically, when the Fed cuts, if you don't recall, they cut in big chunks. So it wouldn't be surprising if they cut for the first time at 50 basis points or perhaps even more if the economy runs off the rails. So again, Citigroup right now standing on an island, one of the big banks, actually the big bank that is most bearish. And the beauty of this call, and I love making calls. I love guessing. I love predicting. I love looking at the chessboard and saying, hey, what's coming? So I respect anyone who is willing to make a counter-cyclical call. So let's watch what happens. Now, if we jump, from this very bearish call and we look at what happened with the second of 3 jobs reports, Citigroup's call starts to look better. So what happened? If you remember, folks, the JOLTS report, which I believe came out yesterday, which basically talked about job openings, came in significantly below expectations. From memory, so I could be off, expectations were 8.4 million, and they came in at 8.1. So job openings are weakening. Less means weakening. Now we have the ADP report, and it too was frankly pretty ugly. I know there's a lot of people on TV talking about it being mixed. It was ugly. There's no ifs, ands, or buts about it. What do I mean by that? Well, first we'll start with the numbers, which we always do. Last month was 192. Expectations were 175. So again, the expectations was for a slowing of job additions, and it came in even weaker, significantly weaker, at 152. So that's more than a 10% miss to expectations. On top of that, we are starting to see signs even below the numbers that are even worse. Manufacturing lost 20,000. Information, IT lost 7. Business services lost 6. In fact, even small businesses, those be 20 to 50 employees, lost 36,000. So what do I take from all of this? White collar is certainly in the crosshairs. We've seen some layoffs. Also, again, we've been talking about this for well over a year and a half. If you are a small company, pretty much in any industry, you're struggling, right? Higher inflation, stricter lending, more expensive lending. This is an environment where the big get stronger, where the big gobble up the little. But frankly, folks, these two numbers, the JOLTS report, ADP report, will mean very little. It is all about Friday. Friday's BLS report, will it be 3 for 3 on the weak side? Will it have revisions lower in past months? We'll see, and we will see very soon. Again, Friday morning, I think it comes out at 5:30 a.m. But yes, folks, the job market certainly seems to be weakening. We will get the weekly unemployment numbers tomorrow. Again, those are ticking about, I think it was 230,000, 225,000. So nothing crazy just yet, but we will be needing to watch that. All right, folks, let's talk about your friend, my friend, Mr. PowerPoint, Billionaire Barry. Folks, Billionaire Barry has been talked about a lot on this channel. He is someone who did not get the warning that the Fed was going higher. He's had to shut down businesses. He's had to sell assets to raise cash. Now, if you haven't heard, he is restricting the amount of money that can be pulled from his funds. Yes, Billionaire Barry is Barry Sternlicht. Yes, I call him just Billionaire Barry. He's fun when he's on CNBC. Dude, when a billionaire brings PowerPoint to CNBC, you know he's stressed. You know he's stressed. One of the things he talked about is they are seeing mounting redemptions. No kidding. You're invested in office and other areas and people need capital. He said, and I quote, "I am hoping this is a 6-month thing and rates need to fall." Folks, Barry, in my opinion, Billionaire Barry has been hoping rates would fall for a year. So he is not changing his tune. In fact, Billionaire Barry probably needs rates to fall to stop the cracks from his empire. Lots of debt, apparently lots of variable rate debt, just get based on behavior. That's just a complete guess. But yes, pretty interesting stuff. Okay, folks, let's talk about the 1970s and the 1950s. Because one of the things you should be doing is looking at what is going on right now and going, hey, are we headed for perhaps a 1950s economy or 1970s? You and I have been talking about for a long time. 1970s is in my spreadsheet. In fact, it starts in 1970. Of course, I'm referring to the 54-year spreadsheet, which you can get for free on my website, onerentalatatime.com. Go get it. Jamie Dimon is also in the 1970s stagflation camp. But 1950s, let's not sleep on the 1950s. Again, this is not my call. This is not what I'm thinking, but there's a reasonable argument to be made to the 1950s. Let's go through them. This was pointed out, at least in an article that I read, by Henry Allen, strategist at Deutsche Bank. Again, I'm summarizing his thoughts just to give you something to think about. This again is the 1950s. The 1950s had a strong labor market. In fact, you think we have low unemployment today? Did you know in 1953? I didn't know this. I'm just going to admit, I didn't know this. In 1953, the unemployment rate was 2.5%. Yes, folks, 2.5%. Next, we had a rising stock prices. Did you know in the 1950s, specifically from 1950 to 1954? Hey, Kip, thank you very much for the super chat. $5, man. I appreciate it. Thank you. From 1950 to 1954, the S&P 500 went up 125%. We've seen a pretty good run in the S&P 500. How about the inflation wave? Well, in the 1950s, or actually specifically 1951, the inflation, aka CPI, peaked at 9.4% and continued to roll over from there, somewhat similar to what we are seeing today. So again, in the 1950s, essentially we had an economy that had some shocks. There was the Korean War and the like. But ultimately what happened is we had a booming or at least growing economy and falling inflation and a strong job market. Of course, the 1970s, the era of stagflation, the era of Paul Volcker having to, in the early 80s, rip the Band-Aid off and go to 18%. I don't know where you stand. I'm currently in the stagflation camp. I can't fathom a 1950s style economy with what I see. But again, with the amount of government spending and stimulus and onshoring and all of these things, hey, it is at least something to think about. Folks, did you see Roaring Kitty? I don't know if this is true. Was reported by CNBC, but Roaring Kitty is a baller. Roaring Kitty is a boss. Roaring Kitty apparently turned a $53,000 stack into $300 million. Think about that. $53,000 into $300 million. That is some astronomical returns. Now, of course, Roaring Kitty is not one for shying away from risk. I don't think any risk manager would look at what he has done and say that is quote unquote not risky. But damn, you got to appreciate the results. So shout out Roaring Kitty, 53K to 300 million. In the article, it talked about him potentially being $1 billion, making $1 billion. Just wild what could be done if you get on the right side of momentum. So shout out him. Next up, folks, I want to remind you that we had a great school session yesterday. The school session was with Bob Langworthy, EA, and owner of Maine Bean Counters. We were talking about taxes. Yes, folks, boring taxes. How to use the short-term rental loophole. We talked about the real estate professional. We talked about LLCs. We talked about all kinds of stuff. Now, because we were very specific and we were very open, that video will not be published on YouTube. If you are a part of our school community, it is open and available for you right now. All you have to do is go to the school community, look under the classroom task, under the classroom link, and you will find a session under special guests, and you will see the hour-long discussion. It is worth it. Bob Langworthy is an amazing EA. He works with real estate professionals. He is a real estate investor. And if you have just basic tax questions, there is a very good chance that Bob was able to cover them. And I want to thank everybody who was involved in that session. It was your questions, whether they were in comments or live, that made that session go. So thank you for being there. I know the folks that will watch the replay will get extreme value. Folks, if you're a part of the school community, don't forget tomorrow, Thursday, 7:30, you're going to talk with Jonathan Twomley. We are going to talk about how to make some money. Folks, I have been very clear. I do not think there is any kind of great or epic pain coming in residential. But hopefully by now, I have made it painfully clear. The greatest wealth opportunity is coming, and it is in small multifamily, specifically B and C properties. These properties were simply overpaid. They have bad debt, horrible assumptions, and instead of real operators, they have financial engineers. It is our job to go rescue those buildings, write disrespectful offers, and make a lot of money. A lot of you do not know how to network, do not know how to find these deals. Good news. Jonathan Twomley is your guy. He has done it, and he is going to talk about it with you tomorrow. You don't want to miss it. Folks, this is going to be the biggest transfer of wealth via real estate in my career. It's coming in the next 24 months or so. Time to get prepared. If you join the school community just for that, it will be worth it. But of course, we will continue to exceed your expectations, because after Thursday, our next session will be with Simon, the Uneducated Economist. He, of course, was featured on Think Media's podcast. If you didn't watch that and get encouraged, you are missing out. Please go check out Sean Cannell's interview with Uneducated Economist. It is amazing. I watched it from start to finish. And then other things we've done. We have, why am I drawing a blank? We have Hemlane. Hemlane has created a session at the end of the month on how to find great tenants. That will be available for you. And Bill Allen. Bill Allen has created a 3-day challenge to help your teenagers and your young kids learn how to flip anything, how to market, how to sell. He has already completed 2 days. I am actively loading those videos now into school. So again, we are about over delivering. You are going to get life-changing education and inspiration in this session. So I expect to have Bill Allen's 3-day challenge that you are free to watch with your kids and see if you can't help them make some money this summer. Folks, your kids are on summer break. Take this an opportunity for you and them to work together to see how they can understand sales, marketing, and make some money. That 3-day challenge will hopefully be up by the end of the week and available for you. Folks, school community, $20. Weekly calls with millionaires. Weekly calls with folks that I trust. More and more challenges for free. We are going to help change lives. We are going to change generations. And you will be in a community with other people doing the work. The school community, which I think is 94 folks already, will be over 100 very soon. And then we're going to start rocking and rolling with special content. And it's going to become the place where we just change lives. Join today. Join today. Take care. Later. Bye.